Hi, Jim Robinson, ProfitTrading.com. I've mentioned in my newsletters a couple times that it's really important to be a trader over an analyst. Like, we can analyze these markets all day long, and hopefully we do a pretty good job, me on this end and you on that end. But really, what matters is when you go down and put the trade on. And I'm just going to do a little example here to show you what I'm talking about. Let's say trader number one is just the greatest analyst in the world. And this is a chart of March sugar. And all along this sideways action, he's predicting March sugar to go to 30 cents. 29.30 cents. Just basically he's really bullish. Let's say you have a guy number two that he's just more a trader, and he's super bearish sugar, and he thinks this sideways action is going to lead to a breakdown. Well, trader number one, he's expecting a move below this low on 10.9 before sugar takes off to the upside. So he's got the right way sugar's going to move, but he doesn't have the exact right price action, And then we come to this day here, and again, one's super bearish, one's super bullish. And trader number one, who's analyzing it, is still expecting a new low to come in here, and this bar happens, and that's just, there's been a lot of those bars in there that have shot up, but then they always come back down. So he's still convinced he's right. And then all of a sudden it shoots up another couple days, and he still thinks he's right. Now he's looking at maybe this is going to be a double top and come back down here before sugar takes off. So in general, in the long run, he's got the analysis right that sugar's going to move to 30 cents. But in the short term, he's not right following the market. He's not with the market, or however you want to look at it. So let's say finally up here he gets bullish, and he says, oh, now this might be a breakout to the upside, and I think my 30-cent target, my 29-cent target is going to work. So he buys, let's say buys right at the top of this day, or the open of this day, which is the top of that day, or close to the top. And then sugar comes down here the next day and slams down, and sugar comes down and goes down the next day, and he just gets scared out and he's out. And then then it goes back up again, but his nerves are worn and he can't get back in, and he just watches it. And even though the whole way here he predicted it's going to get up to 30 cents, he couldn't trade it right, and he didn't make any money. Matter of fact, he lost money. Now take person number two, who's bearish this whole time, totally thinks sugar's going to head down to 20 cents, and he's not looking to buy at all. But he's out. That's the big thing. You're out of the market as a trader. Like I say, usually when the trade happens, it just hits you over the head, and it's like one day. And that's why, again, you can analyze these markets till you're blue in the face, but usually it comes down to that one day where you say, oh my gosh, this is the trade, And that's what we want to be good at. That's where the money is, and that's why I kind of want to make the point. The analysis in the newsletters is just me doing the best I can, and it's not the same as getting in a trade, because you might say, oh my gosh, Jim's been bearish on sugar for months and now it's going up. Well, but I might have changed my position right on this day, So that's why I've always said you got to be able to change your position on a dime, and if you're not in the market, it really doesn't matter what your opinion of the market is at the time. I mean, it does. You want to be right, but when you're trading, that's again when it counts. Let's say then trader number two, who is super bearish sugar, sees these 2 days, and he says that's a breakout to the upside, and he's just quick because he's seen it before, and he's a good trader. And he says, okay, I'm buying, and I'm putting my stop down here or down here, wherever, and I'm holding no matter what. So he gets in the market here or here, whatever day he might see it in, or even here, and he might put his stop down here, and he is sure that he's seen this pattern before, and that sugar's headed higher now. Even though he was bearish sugar, he's following the market, and he's trading things that he's seen before. And now sugar continues higher, and he holds and holds and holds, and he's got a good way of holding and locking in profits, and he follows it all the way up, and he gets out at, like, say 28. The market hasn't broke down yet to 28, but let's just say that it does break down here the next couple of days and he's out at 28. Well, he made a nice profit on this trade, even though the whole way he was bearish on sugar. But he just, once he saw this, he knew that that was a buying opportunity to go long. So I could keep going on this, but like I've mentioned before, I got to keep these videos a little short to get them up on YouTube. They only give you like 10 minutes. So I think you get, I know you get the point of what I'm saying. And basically, the newsletters, I try to do the best I can to analyze the markets. But really, the main thing is the trades. And that's where I think my premium newsletter really shines, is I stay out. I'm good at staying out until I am sure that it's a good trading opportunity, and then we put in a stop and we just hold it, and we just wait and see if the trade goes our way, and that's the way we work it. So thanks for listening to my video. Jim Robinson, ProfitTrading.com.